Welcome to the Tradier Rundown. I am Jim Uriel. That's Bob Iacino. Together, the two of us, we are the host of Tradier's The Trader's Edge that airs live Wednesdays, 3 p.m. Central Time, 4 p.m. Eastern. Robert, how are you?
Good. How are you, Jimmy?
Good. So it is July 3rd.
Yep.
Okay. So we have summer months ahead of us. We have the VIX is relatively low. I don't know if you have it in front of you right now. But it definitely seems, I don't know, call me crazy, but some things that could be happening in the next month or two that could cause some market volatility, but we're not seeing it in any of the usual suspects. What do you think?
Yeah, I would say that, like, if you get this video and you don't read the rundown, this is one of those weeks you're going to want to read it because they bring up a lot of points. And as I was reading and I said, wow, that is weird. Ooh, that is something. Oh, I really should watch this. There was a long list of them. I mean, I'll go through Iran and North Korea, allied with China, U.S. policy, the list of uncertainty. The only thing I disagree with there is that the polls show November's a toss-up. I don't think it's a toss-up. I just don't think we know who Trump is running against at this point. Economics remains uncertain. We're in a bad news is good news sort of a regime right now. And the bad news has been, I mean, the data has been weak as of late. Would you agree?
I think the data has been, like today's data, I think was awful. That ISM number was awful. And then, so now it calls the question. We saw, 4 inflation data points in a row that showed inflation was subsiding, but everyone wanted to believe that it was subsiding without a big economic slowdown to accompany it. And now I think that it's evident that there's at least a solid possibility that a sizable economic slowdown is following it as well, too. Back to the Trump, the president, all the nonsense that's going on. The dollar has been relatively buoyant. I know you know my opinion on that, but what do you attribute that to?
Well, it's interesting because I looked at the dollar index today, which I don't look at a lot. Okay. And you mentioned the VIX, by the way. I'm pulling that up so I can talk about it in a second. But the dollar actually has fallen now 6 days in a row. But when you look at the longer term trend, it's strong and it feels like a best house on a bad block kind of a thing. You remember you and I have experienced personally in our careers several races to the bottom with currencies. And right now, the ECB, the Bank of Canada, they're all ahead. I mean, we've had other major central banks cut rates. And we just saw the FOMC minutes today, and it didn't seem to me like anybody was in a hurry to cut rates. Did you read it differently?
No, I read it the same exact way. It doesn't seem like anyone's in a big hurry. I think we will cut rates soon because I think this economy is deteriorating quicker. Now, when you look at the last half of the year, now last time Donald Trump won in 16, it caused this huge volatility. I personally don't think the volatility about the outcome of the election is going to be that big a deal, but I do think volatility about what happens before the election instances could cause volatility. Do you agree with that point?
Yeah, I do. I think there's going to be a lot of political drama, and the least of which is going to be the actual election. I think it's all going to be the precursors to the election. VIX, by the way, sitting at 12 as we speak. Exactly. So there's quite a bit going on in terms of that. I don't think that the last half of the year after the election, or I should say the fourth quarter, that markets are going to suffer in that quarter because of the election.
That makes sense to me. Okay, this is the Tradier Rundown. I'm Jim Uriel. That's Bob Iacino. Please join us on Tradier's The Trader's Edge, live Wednesdays, 3 p.m. Central. Thank you guys for tuning in.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.